Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap, recapping the end of a very beautiful week of recovery for your bulls. And today's price action, guys, was largely due to two things. Number one, the very good Apple earnings we had yesterday, which really lifted up the technology sector as a whole. And then second, we had a few pieces of macro data come in this morning. Number one, ISM services data that shows services inflation has been trending down over the month of April, at least in terms of your services. And number two, we did get an NFP jobs report, so some non-farm payrolls numbers, the most important jobs data every single month, and that actually came in lighter than expected. So a little bit of a weakness in the jobs market, but that does contribute to potentially pushing the Federal Reserve's hand if the jobs market does persist to be a little bit weaker than expected. It can push the Fed's hand into dropping interest rates sooner than anticipated. Now, still forecasting for that first rate cut between September and October. So in today's video, guys, we're going to take a look at exactly what happened on that macro data, briefly take a look into the jobs numbers and explain what exactly happened. Number two, I do have some earnings for you guys that we've prepared for the day. So we're going to be covering a couple of earnings that happened yesterday. Number one is going to be FORTINET. Number two is going to be CLOUDFLARE. And then third, one that's not on this list is going to be MERCADO LIBRE, the quote unquote Amazon of Latin America, one of my favorite swing trades at the moment. So we're going to go through those earnings and then, of course, go through our major technical analysis rundown in terms of our major indexes, big tech names, and lastly, take a quick glimpse into my portfolio and see how we wrapped up the week. So without further ado, guys, let's get right into today's video. SPY up 1.24%, QQQ up a healthy 2% off the back of those Apple earnings, and really some nice rotation across the board here. Financials, healthcare also participating in the rally. Take a look at your heat map here, guys. Well, you can see that big tech was pretty much your leader on the day. Microsoft, Apple, Meta, even Google and Amazon, everything in the green, and semiconductors coming in roaring back fashion. Very nice performance for them to cap off a week. And healthcare was slightly mixed, even though the index did perform to the upside. Financials as well, very nice recovery here by your credit card issuers. The major banks just holding steady. And for the most part, guys, the bottom half of the market performed relatively well. That puts us on a one-day relative performance of every single major sector in the market was green. So very good market breadth to conclude this week in terms of a rally. And on the one-week relative, where do we now stand with last week's red and this week's overall green? Well, it leads us to most of your sectors ending the week in the green. Only two to the downside were communication services and energies as a whole. Financials still relatively down on the week, minus 0.1%, but that's very negligible. I would call that a flat week for financials. So before we get into more technical analysis, guys, let's take a quick glimpse into the jobs report that came out this morning. And you will see here that if we just pull up the numbers initially, the expectation for the jobs report, guys, was about 243,000 jobs to be added to the economy, and we only added 175,000. Now, if we were to take this on an absolute number, 175,000 is quite good, but it is very light compared to our prior month's reads. So we also had some ISM services numbers came in, and you can see the expectation was for 52. Anything above 50 shows that it is growing. Anything below 50 shows that it is contracting. So here, your services data contracting on a month-over-month basis. That's a very nice change, a very stark contrast between the data that we were getting in January, February, and March. So nice to see that April is a little bit of a down month in our stickiest portion of inflation, your services sector. So now let's move into the jobs data. U.S. job growth totaled 175,000 in April, much less than expected, while unemployment rose to 3.9%. We're going to take a look at all that in the context of prior months with a few graphs that CNBC has prepared for us. So let's get into it. Non-farm payrolls increased by 175,000 on the month, below the 240K estimate, which is exactly where we were talking about, right? The unemployment rate ticked higher to 3.9%. Against expectations, it would hold steady at 3.8. So here is your monthly jobs creation, guys. As you can see, it's the lower end of jobs creation that we've been getting over the past year and a half, but is still a positive number and is still in absolute terms relatively good. But it does show a little bit of a sign of weakness here, right? And that's what Jerome Powell is looking for. If the jobs market kind of weakens down a little bit, it can tilt his hand to decreasing interest rates, because just remember, the Fed has two mandates, guys. Number one is keeping inflation under control and towards the 2% target. And the second mandate of the Fed is for full employment in the economy. So if the economy starts deteriorating ever so slightly, not talking about a recession or anything, just a slight slowdown in jobs creation, slight uptick in the unemployment rate, that could be enough to really tilt the Fed's hand, as opposed to maybe doing no interest rate cuts this year, which has been the discussion the last 2 weeks. Well, now maybe he will do one starting in the month of September. So all of this, guys, is still just speculation, right? The interest rate narrative is front and center to these markets right now. So all of these points of data that we've been covering on the channel now for the past 6 months, they all weigh into that final decision by the Fed. When will they decrease interest rates, right? So let's take a look down further in the article. Average hourly earnings rose 0.2% from the previous month and 3.9% from a year ago, both below consensus estimates and an encouraging sign for inflation. So obviously we don't want to see, well, we want to see people making more money with average hourly earnings going up, right? But we can't have those skyrocketing. A skyrocketing wage growth curve can lead to what you call a wage price spiral. More specifically, guys, what that means in layman's terms, it's very, very easy. If companies choose to pay their employees a lot more money, those employees then have more disposable money to spend on goods. And then when they drive all that extra income into goods, it rises the price of goods, which then consumers can't afford. So then companies need to pay them more money and the cycle just continues. That's what you call a wage price spiral. So that's what we were looking to avoid. And so far, guys, no signs of that. Average hourly earnings are relatively still healthy. Now, the report raised the prospect of a Goldilocks climate where growth continues, but not at such a rapid pace to force the Fed to tighten policy further, meaning more interest rate hikes, right? So if they want the economy to be growing, but they don't want it to be growing too fast, that it undoes all of the good results that they've gotten in bringing down inflation so far. Now, with this report, the porridge was just about right. Once again, bringing back the Goldilocks metaphor, right? What you would like to see at this point in the cycle, we've had interest rates jacked up pretty high. So we would expect to see the labor market slow down a little, but we're at pretty high levels still. So that is exactly what we've been talking about here, guys. Take a look at your unemployment rate, 3.9% at a first glance. Can seem to be a high number, but in the context of where we've been over the past year and a half, guys, it's actually not that bad. It is slightly, ever so slightly uptrending here, but you can see a very far cry from the unemployment rates that we had at the peaks of 2021 and even early cycle there in late 2021, early 2022, when we were really still back above that 4% range. So fairly decent unemployment rate, all things considered. Now, but the jobs report indicated an easing labor market and softer wage increases. Traders priced in a strong chance of 2 interest rate cuts by the end of 2024, with the first reduction expected to come in September. So here's your year-over-year percentage change in average hourly earnings. Just goes to show, guys, that yes, wages are increasing, but now they're increasing at a slower pace. And that is what we need to see, guys. But still, 3.9% wage growth on a year-over-year basis is still above the levels of inflation, right? I'll remind you, CPI for the past couple of months has been coming in anywhere between 3 to 3.3, 3.4%. So to see wage growth outpacing inflation, that's exactly what you want to see, guys. People making more money than the cost of living is going up. Very, very beautiful indeed. This is the jobs report the Fed would have scripted, said Seema Shah, Chief Global Strategist at Principal Asset Management. The first downside payroll surprise in several months, as well as the dip in average hourly earnings growth, will bring the rate-cutting dialogue back into the market and perhaps explains why Powell was able to be so dovish on Wednesday. So everything coming together perfectly, guys. Still, no real red flags in the market so far. Inflation still trending down to target. The jobs market, although cooling down ever so slightly, is still healthy. And the economy, the GDP numbers that we got last week did still show that the economy is healthy. So everything right now is indeed moving in the right direction. No major red flags to discuss at the moment. Now, with that out of the way, guys, let's jump right into our company earnings. And we're going to be starting off here with one of your cybersecurity companies. So let's check on how cybersecurity is doing as a whole as an industry. So we're going to start off with CLOUDFLARE, Net. So Net had an absolutely atrocious earnings, guys, but it wasn't necessarily because of the numbers that came out this quarter. Those were actually quite good. It had to do with some comments that the CEO made about the general macro environment landscape right now. So in terms of your EPS, very healthy EPS beat by about 21.4%, and they did beat on revenue by 1.44%. I'll remind you, the problem with Cloudflare right now, guys, is twofold. Number one, they are not net margin positive. This company loses money quarter over quarter and still no clear path to profitability. Still probably a good year plus away from getting consistently profitable. And another thing, guys, about this company is that the company runs a significant amount of debt right now versus the amount of cash that it has on the balance sheet. So the amount of debt, 1.44 billion, in a high interest rate environment, guys, when you don't have a lot of free cash flow and you don't have a lot of cash on the balance sheet, you need to raise debt, and raising debt at these interest rates, guys, really eats away at your net margins. So those two things are quite unfortunate for the company. That being said, the company is still growing its EPS healthily, right? You can see that we are expanding EPS for the next foreseeable future, and we are expanding revenue. So we would hope to see this company become profitable maybe in the late stages of 2025, but still not there yet. And that is why it gets pretty hard whenever they don't have a perfect earnings quarter. Now, moving into the article, guys, let's take a look at exactly what happened. FORTINET and Cloudflare stocks are sinking. Uncertainty is up in cybersecurity. So, in a call to discuss Cloudflare's results last Thursday, management earnings used the term uncertain at least 5 times, highlighting geopolitical shifts that have changed customers' buying behavior. This was the CEO had to say. A lot spooks me right now, said CEO Matthew Prince. We are in a much more uncertain environment, and the signal that we're seeing is that uncertainty is up. This, guys, I mean, I'm not a CEO by any measure, but this is not what the market wants to hear, guys. You have to reinforce the positivity of your company. When you tell the market that you are uncertain and you're the company's CEO, the market will not digest that well every single time. I'll remind you, the one thing that the market hates continuously is uncertainty. Uncertainty around inflation, uncertainty around interest rates, right? All of these things the market really hates. And on a company-specific note, when a CEO comes out there and says, we're uncertain about the landscape ahead of us, well, it doesn't really give you the required tone that you would like to see when thinking of investing in this company, does it? So, Cloudflare's forecast of sales for the full year was conservative. The security company stuck with an earlier call that sales will be between 1.65 billion and the 1.652 range, whose midpoint is a touch below the consensus call of 1.651. So really arguing over pennies here. They came in roughly in line with their guidance. That forecast and Prince's remarks likely overshadowed the result for the first quarter. As we said, guys, the results were fairly good, but the comments by the CEO and the somewhat shy and timid guidance issued by the company is what made the company drop pretty much almost 16% on the day. So very, very bad day for them. Not going to take a look at much more of their financials, but that was the gist of their earnings, right? So in terms of the revenue growth, guys, and EPS growth, very, very healthy over the next few years. We already covered that when we went through these, the graphs that I showed you guys on TradingView. Now, in terms of the valuation, guys, well, Cloudflare is very, very expensive in terms of fundamental valuation. In terms of the technicals, right? The technicals are looking quite decent, but the valuation, even at these lower prices right now at 74, is high. Their 2024 forward PE at $74, 165. That's a high number. That's why we put it as an expression of the PEG ratio to see as an expression of the, their forward PE versus their EPS growth rate. That gives them a PEG of 3.56%. Anything under 1 is good. Between 1 and 2 is not bad. Anything over 2 starts to get high. When you start getting into 3, 4 PEG ratios, that is extremely, extremely high for any single company, guys. Cloudflare, although they are a good company, they are not my favorite cybersecurity at all because of this reason. The company is expensive and because the company is just not yet profitable. There are already profitable cybersecurity companies out there which provide a much better risk to reward ratio for the company, for the industry as a whole. Sorry. Now, in terms of our technicals, guys, well, very, very simple. We were in a monthly uptrend, just looking for the monthly higher low for the potential recovery. But this company is going to recover as a byproduct of the overall cybersecurity market coming back, not necessarily because the company is going to be doing anything so different in the next quarter. We already have their guidance. Their guidance is roughly going to be the same as they issued in the prior quarter. So that is pretty much everything for Cloudflare. After we cover Fortinet, we'll go through my two favorite plays. And as a matter of fact, Fortinet, I'll just tell you guys right away, Fortinet is actually one of my favorite cybersecurity plays because it has all the good things that Cloudflare is unfortunately lacking. So Fortinet, I'll quickly remind you, this company, very nicely profitable company. We just got their last quarter right here, net margins of 22%, stark contrast from Cloudflare, right? In terms of their financials, look at their balance sheet as well. Balance sheet, extremely healthy. Cash and cash equivalents and free cash flow per year is well in excess of their debt. And last quarter is just the same. You can see their net debt was a total of about $1 billion. They generated $600 million in free cash flow, and they're sitting on about $2 billion of cash. Much better financial position. In terms of your EPS growth and revenue growth, those are also additionally healthy, very consistent EPS growth over the next 4 years and very consistent revenue growth over the next 4 years as well. So at least they're fundamentally more sound of a company than Cloudflare, in my opinion. Now let's take a look at some of the numbers for Fortinet. So Fortinet Q1 earnings aligns with EPS projections, surpasses revenue estimates. Very decent numbers by Fortinet. Let's take a look at them. EPS beat by about 12% and revenue coming in over 1% of a beat as well. So double beat and a raise on guidance from Fortinet. Take a look right here, right? Your net income, $299 million. That is up from the year ago period. Services revenue, a good division for the company, increased 24% year over year, indicating strong growth in service offerings. Free cash flow as well. We just took a look at that, $608 million. Very decent for the company. Roughly in line with how they've been performing in the prior quarters. No tremendous growth right there. And they do have still a decent amount of deferred revenue. So how many contracts, how many orders do they have in the pipeline for their services? Well, very good. They grew 18.6% to about $5.8 billion in deferred revenue. Just as a quick glance, guys, Fortinet makes roughly about $5.3 billion as of last year. So that's roughly 1 year's worth of revenue in the pipeline. Very good for the company. The company reported a total revenue of $1.35 billion on the quarter, 7% year over year, and surpassing the estimate of $1.337 billion. The growth was primarily fueled by a significant 24% increase in services revenue. However, product revenue saw a decrease of 18.3%, totaling $408 million. So their service revenue is a lot larger than their product revenue. So the gains in services did offset the products division, but still a little bit of a mixed bag for Fortinet. One of the reasons, guys, that Fortinet was down roughly about 9-10% in the after hours was because their revenue has kind of been flatlining here over the past 7 quarters at this point, right? You can see that they're kind of stuck right here at about the $1.3 billion mark. That growth expansion will probably resume at the tail end of this year. At least that's what most cybersecurity companies are guiding for, right? You can see Q2, Q3 going to be roughly flat in EPS and also roughly flat in terms of revenue, but then Q4 should be significantly better. And then the growth really starts back in 2025 and 2026. So that's why Fortinet kind of got hit a little bit, just because they're not growing revenue as aggressively as Wall Street would have anticipated so far. But as we stated, the company's financial position is very good. Fortinet's liquidity position remains robust, cash and cash equivalents totaling $1.9 billion, as we already saw, and they reported free cash flow of $608 million. Very decent here, guys. Looking ahead to Q2 2024, Fortinet expects revenue in the range of $1.375 to $1.435 billion. That is fairly decent, and the company anticipates total revenue between 5.7 for the end of the year and 5.84. Very decent, guys. That is in line with their prior guidance, so really no change there. So Fortinet, one of my favorite cybersecurity companies as well, and we're kind of trending back towards my sweet spot for the company. If we can get back to 55 all the way down to roughly 47, that's where I was picking up the company pretty much last year in the fall when it dipped heavily into this area, and I will start playing it more aggressively as we dip back into this area. I think that it has really good value down there. In terms of their valuation fundamentals, guys, well, let's take a look. Revenue growth and EPS growth per year, both very healthy. That gives them a 2024 forward PE of about 23.3. Not that bad. That gives them a forward 2024 PEG ratio, so EPS here, PE ratio as an expression of their EPS growth, about 1.73. That is literally half of Cloudflare's, right? So very decent. That is a fair valuation for a cybersecurity company, in my opinion. It is one of my top 2 favorite picks. My other top favorite pick, guys, is, well, I just put the ticker there, is Palo Alto Networks. So we went over Palo Alto Networks earnings last cycle. They have earnings coming up, I believe, in about 2 weeks' time. Yeah, in about 2 weeks' time. And their valuation, roughly at current prices, is about $296. Their valuation is about a 2.4 peg. So even this company is more expensive than FORTINET. But obviously, guys, it's very, very difficult to pick and choose which company in cybersecurity will be the winners. The industry right now is very fragmented. There's so many players, and it's very tough to really establish a moat in cybersecurity, right? It's a very simple product offering, and there's not really any competitive advantages that one company can have against another, right? All of them largely have somewhat of the same offering. So they're really trying to compete for a slice of the pie. I do think it's an industry that will, over the next 5 to 10 years, consolidate into a few stronger names, and it'll be an industry where probably the winners take most. That being said, my two biggest winner picks for this industry as a whole is FORTINET and Palo Alto Networks. But as a whole, guys, if you like the industry, I would usually go with something like this. It's the cybersecurity ETF. This ETF only has about 25 companies in it, the 25 biggest and best cybersecurity companies in it, and it doesn't have any companies like Microsoft, Apple, or Amazon or stuff like that, right, to complement it. It's really pure play cybersecurity companies. So if I would be looking to build a position in cybersecurity, I would most likely go with this Wisdom Tree ETF. The ticker is WCBR. So if you guys want to do a little bit of research on that on your own, this is my favorite cybersecurity ETF. If you're just unable to choose between many different companies and you just want to go with an overall ETF position, that could be a very good choice. Now, the third company we're going to look at, guys, in terms of earnings is one of my favorite companies right now for swing trading and also for a pure form growth play, and that is Mercado Libre. Mercado Libre coming nicely up after their earnings, up roughly 8.2% on the day. They reported yesterday in the after hours. Now, what did they report? Wow, well, they blew it out of the park, guys. Beat on EPS by 11% and beat on revenue by 13%. Tremendous beat. In terms of the technicals, guys, I was always saying ever since we covered them last quarter, gorgeous, gorgeous, gorgeous monthly uptrend, looking for the monthly higher low retest of the resistance before putting in another leg to the upside. The growth story of this company was never in question at all, guys. So hopefully everybody was able to maybe build a little bit of a position down here. I built a little bit of a position. I could have built a bigger one, and that might be a mistake, but I'm still happy that at least I do have some exposure to Mercado Libre at this point. Now let's dive into their earnings and see exactly what they said. So Mercado Libre surpasses analyst expectations with strong Q1 2024 earnings. Take a look at these numbers, guys. They are fantastic. Revenue reported $4.3 billion. That's 36% year-over-year beat. Net income, how much is their bottom line? $344 million. That is 71% increase from the prior year and well above the forecast of $313 million. Now, their total payment volume. So if you don't know this company, guys, they have two different lines of business. They have the marketplace business, which is exactly like Amazon for Latin America. You go on the website, you order cheap products, and they deliver it to your doorstep within 1 to 2 days of shipping. And then they have their fintech business, which you could compare to Square or SoFi, whereby they do peer-to-peer money transfer solutions. They also have a credit division too, and it's just basically a full service fintech division. So this company really has very, very good numbers. And within that fintech division as well, they also have an advertising branch, kind of like Amazon as well, which has been growing very, very fast. So gross merchandise volume for the Amazon portion of their business, look at this, guys, 20% year over year. Their total payment volume for their fintech business, 35% year over year. These are tremendous numbers, guys. Operational efficiency, 12.2% margin, very, very decent. They had a nice little raise on that. And their fintech growth, fintech services showed accelerated growth with a 38% increase in monthly active users, reaching 49 million. Such an amazing beat by such an amazing company, guys. Do not sleep on this company. I'm telling you, we probably have a very good winner here. The platform serves over 218 million active users and integrates various businesses to enhance its e-commerce and fintech solutions across 18 countries. They are the biggest and the best in all of Latin America, guys. And I know Latin America, sometimes you may get a little bit of cold feet investing in Latin America, but when you do invest in emerging markets, you have to go with the biggest and the best companies, and you're looking at one right now. Now let's go through a few of their earnings slides just to show you how solid of a company Mercado Libre actually is, right? Marketplace highlights, strong growth momentum in Brazil and Mexico, GMV, right? Steady increases in all your countries. Argentina was actually your best performer, but look at these gross merchandise volume outperformance. Brazil, Mexico, almost 30% here, all across the board. Look at these numbers, guys, right? Extremely good. Q1 of 2024, 71% beat. Items sold also very nicely up. Q1 2024, the yellow line right here, up across most of their markets. Unique active buyers still maintains relatively towards its all-time high. Marketplace highlights, items sold per unique buyer, also trending towards its all-time highs. A little bit of a pullback, but obviously, guys, it's a business exactly like Amazon, right? As the year goes on, their sales get better, right? So early on in the year, Q1 for a lot of merchandising companies is their worst quarter. So we can't expect this graph to do something like this for the remainder of the year and just move up. Same day and next day shipments, very good. Nice little uptrend. As I said, that uptrend should resume as we move on from the quarter. Right? Fintech services highlights, monthly active users, net increase, assets under management in their fintech division up to about $5.5 billion, extremely solid. And their credit portfolio is also going higher as well. In terms of their credit worthiness of their clients, well, they're making a decent amount on net interest margin after their losses. These are very good net interest margins, guys. Over 30% is what any financial entity would want to see. So they're maintaining very strong. Past dues, 15 to 90 days. So how many people have not paid? You can see that that's actually getting significantly better as time moves on. So they're really getting better and better clients into their fintech division. And here you can see provision coverage, even though their amount of past dues is coming down, they're doing a great job of foreseeing a potential negative future if ever it happens. They're increasing their provision coverage for losses. This is how much money the company sets aside for all of these people who may just not be able to pay their credit balances down in full. So the company is just operating on all cylinders, guys. Such a great company. That's pretty much the gist of things. I don't want to really go through a deep dive into this one. We did a very deep dive last quarter, so not much has changed. Everything is really still moving in the right direction. As of now, guys, in terms of the valuation is still relatively fair. Let me just move it over right here. So in terms of the valuation, guys, very decent valuation. As you can see, their profit margins now finally profitable and expanding. This looks identical to Amazon almost. Obviously, their fintech division is a more profitable division. Now, in terms of your EPS growth, take a look at this EPS growth through 2026. It's about to explode. Take a look at the revenue growth as well. Very nice revenue growth through 2027. So look at this EPS growth through 2027. 51% revenue growth, 21% a year, guys. These are per year numbers. That gives them a PE ratio at 1630, which is roughly the price right now of about 47. Well, it's funny, I didn't change this price at all. This is literally the same price it was at when we did the analysis after their last quarterly earnings, right? So PE ratio of about 47, nothing has changed there. That gives them a PEG of only 0.92. For a company growing this fast through 2027 to find it under 1, guys, that is undervalued in my opinion. And a lot of analysts would tend to agree with me. The midpoint price, while we're at it right now, your average actually, as a matter of fact, is $1,965 per share, and your max is about $2,160. Strong buys virtually across the board. Nothing wrong with this company at all. Still one of my favorite plays in the entire market if you're looking for a solid growth stock. All right. So that's pretty much everything we had for our earnings today. Now, guys, let's dive right into our indexes and see what the bulls did. The bulls coming roaring back, looking very good here, guys, right? So what we wanted to see is exactly what we were talking about in yesterday's video. We wanted to see a break and close above this area of congestion. We are now back above all of our short-term moving averages. We are now above our previous highs. Your daily uptrend simply continues at this point, and we're now finally back above this green box that used to be support, was acting as resistance for the bulls, now cleanly back above it. So then we lead into our weekly chart. Since this weekly bounce is now healthily underway, let's take a look at the size of the bounce. The size of the bounce now got up to my ideal number, the 618 number. It sets up the bulls beautifully that when this move does top out, we could potentially be looking for a recapture of the weekly uptrend since we lost it with this move down here, loss of these lows, right? So we just lost the weekly uptrend. Now it's up to the bulls to regain that, most likely in 2 steps is going to be the expectation that I have. So very, very good job on the bulls recovering. The daily is looking good now. The size of the weekly bounce is looking good now. So we could have just had a potential bottom out in the cycle. Now, it's not to say that we may just V-shape this tremendously, right? We may just hesitate around here for a while and then move back up to the upside throughout the month of May. Now, moving on to QQQ. QQQ, largely the same analysis as SPY, right? Clean daily uptrend at this point, back above our moving averages, still not entirely cleared through this prior support, which was now resistance zone, but we're getting there very, very quickly. So any move to the downside now, guys, just going to be very high or low, anything above 420.71, just looking for a daily high or low for further trend continuation. In terms of the weekly, guys, we were in a weekly downtrend, so we were looking for the size of the bounce to let us know, can the bulls recapture this into a weekly uptrend? Well, the size of the bounce right now is quite juicy, guys. Take a look at the size of this bounce. Let me just blow it up for you, right? So the size of this bounce back above 618. So that sets up the bulls similar to SPY to maybe set up for the 2-step weekly uptrend recovery. Looking very, very good indeed. Nothing bad to say about this chart. Now let's move on to XLF financials. Financials still trying to find their higher low. I will remind you guys what we're looking for. We need to see the hourly trend change. The bulls cannot seem to get a clean breakout, right? We're trying, but we're not just getting it yet. So still in the process right now of trying to set that daily uptrend and breaking to new highs, which would confirm a daily uptrend back in motion, right? Daily downtrend, juicy size of a bounce, looking for the daily higher low for the daily uptrend conversion. So the bulls still fighting in this location right now, but still not out of the woods, right? We need to get closer back to these highs, 41.20, to really cement the fact that we're back in a daily uptrend and really get this weekly uptrend back in motion too. So all in all, looking fairly decent, but the bulls still have a little bit of recovery in my opinion. Now, let's move into our healthcare sector, shall we? So healthcare also not looking too bad on the week, still just sideways consolidation, right? So in terms of the healthcare sector, what we were looking for, well, it was obviously a daily downtrend, third leg right here, and then we had an engulfing move, and now we're kind of just range bound. So the bulls are still hesitating, right? No clear hourly uptrend, just a massive range of consolidation. So what we need next week, guys, is we absolutely need a break of 141.70. If we can get a break of 141.70, daily uptrend will be back in motion, and then we can really start taking away some of this damage that the bears did, right? Weekly downtrend was clear as day. As of now, the size of the bounce is not yet adequate enough, guys. Only up to about 38.2%. So it stands to argue if these bulls lose these lows down here, 139.59, well, we may just be due to revisit these lows. This so far is looking like a bear flag. If it wasn't for the fact that the rest of the markets are looking overall bullish right now, I would say that healthcare could be due for the potential rollover and revisit of these lows before the bulls truly find a bottom. But since the overall market is fairly broad right now, participation to the upside, I would not be surprised if early next week we do get that daily break. It's just that healthcare as a whole has kind of been lagging, right? The size of the bounce just hasn't been juicy. Look at the size of the bounce on financials was okay. The size of the bounce on QQQ, very healthy. Size of the bounce on SPY, relatively healthy as well. Healthcare really kind of lagging behind, right? So unfortunate for them. We'll need to see what happens with them next week. One of my favorite companies still on sale, by the way, in healthcare is AbbVie. AbbVie at a super juicy level. I will be playing this stock most likely below 160 if we can have that opportunity over the next couple of weeks. Now moving into semiconductors. So semiconductors, heck of a nice recovery, but still, guys, still not breaking above our previous highs right here. So still just looking for that daily uptrend continuation. We got our higher low, did not break this, pretty much a double low right here. Now looking to break pretty much 219, get above 219, daily uptrend simply continues. But we did do a few key things today. We got back above our green box, which was prior support. That was pretty much the 216 down to about 212 region. And we are now cleanly above our short-term moving averages. So bullish momentum is to the upside. Now let's take a look at the weekly as well, right? It was a weekly downtrend, but now the bulls have put in a very healthy bounce. Look at the size of this bounce, guys. Very, very juicy bounce indeed. We're pretty much up to that 618 level. So a lot of our major indexes are now back to the 618 retracements, which does lead us to believe that even if the moves get stopped out shortly, we could just be looking for a two-step recovery of this weekly uptrend. So semiconductors doing a great job in recovering today, led up, of course, by your biggest name in the industry, which is NVIDIA. NVIDIA having a fantastic day. So looking forward to see if the bulls can now finally recapture some more of this weekly time frame. But it does for now look like your weekly lows are indeed set, and those may as well just be your monthly lows too if we are to really resume this trend to the upside. So looking very good, guys. I will still be shopping for some of the remaining deals that are still to be had in semiconductors. A few of the ones that just come to mind, AMD, and I may even be looking for TSM, right? TSM still at a relatively cool valuation, even though we're close to the all-time highs. All right, so now that's pretty much it for our semiconductors industry. Now let's move into the Russell. So the Russell had a very good day today, 0.99% to the upside. Daily uptrend healthily back in motion, clearly above our short-term moving averages right now. So since this daily uptrend now has some legs to it, let's measure the size of the move in terms of this weekly drawdown, right? Was a beautiful weekly uptrend by the bulls. We lost it by losing these lows right here. Now the bulls are trying to recover this. Let's measure the size of the bounce. Got all the way up to exactly the 618 level again. So if for whatever which reason this daily uptrend, right, comes to a close here and rolls over, we'll just be looking for a potential weekly higher low for further trend expansion, get that weekly trend back to the bulls. As of now, the daily is looking very healthy though. Any pullback, just looking for a higher low, anything above 195 for that higher low for further trend continuation. And I do believe that the bulls now can use this area as support, right? Your moving averages are down there, and this big red box, we're finally back above it here, guys. Huge prior area of resistance. So we really need to mount above this, retest it as support, and then run and start attacking these 210 levels once again. Now moving on to the Dow Jones. Dow Jones also having a very healthy day of lift. This is kind of what I was predicting on the channel yesterday with Apple being so bullish on the day. It's really normal to see the Dow Jones having such a nice move to the upside. We are now clear of a few key areas of resistance as well. Take a look here. We're now above all our short-term moving averages. We are now also above this line that acted as support for so long, 38,500, back above it. So as a whole, daily uptrend back to the bulls. Any pullback just going to be looking for a higher low. Anything above 37.7 is going to be looking for a higher low for further trend continuation to the upside. Bulls looking very good, mounting a recovery on the Dow Jones. And you can see the weekly trend also starting now to curl. We lost that weekly uptrend by losing these lows right here. The bulls are now looking to reclaim that. They can either do it in two ways. Either we V-shape, which is the unlikely scenario when we have such a big move down, or the two-step process of recovery. So what I'd like to see from the bulls is really mount above this area. And then if we need to retest that, that would be our weekly retest and potential launch to the upside as we recapture this weekly uptrend. Looking good though. The bulls really never lost this lower area of support, looking very healthy in terms of the Dow Jones as a whole. In terms of our yield, so this data today did impact our yields quite severely. You can see that ever since that meeting with Jerome Powell, where he kind of quelled people's fears that rates may be coming even higher, well, you can see a net decline in yields ever since that day on Wednesday, right? Big red days back to back. So yields now potentially finally starting a little bit of weekly pullback, but we are still in a very clear weekly uptrend, just looking for a higher low for trend continuation, unless the bulls give back too much of this move, then we can set up for the weekly rollover and then eventually just regain control here on the monthly for this potential eventual monthly downtrend, guys, because rates cannot stay up here on the 20-year around 5%, and even on the 10-year yield, 4.5% is quite elevated. Same type of trade. We're just looking for this to peak out right now, and it seems as though it is starting to peak with all of those fears one by one being alleviated by Jerome Powell and by the markets as a whole. So looking fairly decent. Now let's move into crypto a little bit because crypto did move significantly today. So crypto, Bitcoin, heck of a recovery, guys. Nice, 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 almost engulfing move, right? We still have a little bit of resistance above us, your short-term daily moving averages, but we were in a daily downtrend. Now we have an almost 100% engulfing move, so it'll be up to the bulls to reset this into a daily uptrend and start attacking that 67,000 level, which is going to be acting as resistance right now. So that's looking very good on the daily. The bulls have created a ton of space to make that happen. If they do get the daily uptrend, it means our weekly low is set. And since we are in a weekly downtrend as well, we will need the bulls to put in, similar to any market or any index, guys, need the bulls to get a nice sized bounce to then recapture this into a weekly uptrend. But all in all, Bitcoin looking very good, still holding strong, guys, not losing your major areas of support just yet. Now moving on to Ethereum. Ethereum also with a nice recovery, but not as good as the Bitcoin recovery, right? Ethereum, the bounce is just not as juicy. So Ethereum still not with the engulfing move, still just looking to maybe reset into a daily uptrend. As of now, guys, it is a daily downtrend pretty much. Need the bulls to reverse that. That being said, we still haven't really flushed this zone right here with a hard close below your 2,800 range. On the weekly, we are still in a very clear weekly downtrend currently, but could be approaching some bottoming areas. So if ever I do see some revisits of these lows right here, guys, 28, 27 on Ethereum, I most likely will be putting in a few buys, a few bids on this coin specifically, right? So looking very good, still trying to get that weekly turnaround, and similar to Bitcoin, whenever we do, eventually, if we do, get that daily uptrend in motion, we need to measure the size of the weekly bounce, right, in relation to our most recent lower high, 3650. Need to see a healthy bounce to eventually be able to recapture this into a daily uptrend. Now let's take a look at our big tech. All right, sorry for that, guys. So in terms of our big tech names, guys, starting off with Apple. So Apple looking very good, 6% gain on the day after their fantastic earnings. They almost got as high as about 187 on the day. Significant bounce from Apple, but same as Google, right? Google had very good earnings and just proceeded to be sold down. So might be the same thing for Apple, not too sure if that's going to be their case or not. But if it does happen, I just would not be surprised. That's kind of what I'm hinting at here. So clear daily uptrend by Apple now. No secret there. Any pullback currently still just going to be looking for a higher low, anything above 169. So much space for that daily higher low for further trend continuation, right? The area that I would be targeting for a pullback is our previous area of support. Think about that 180 line that the bulls were defending so aggressively, right? Think of that area right there. And if we slowly pull back in that area, we may get a few of our moving averages slightly curl into these levels up here if it really takes a little bit of time for Apple to consolidate, right? So that is the area that I'm going to be looking at. Very healthy weekly breakout as well, right? So weekly downtrend clearly in motion by Apple, and now engulfing move on the weekly. So any pullback on this daily time frame will be also for a pullback on the weekly. So we're just going to be looking to set the weekly higher low and then break this into a weekly uptrend, guys. We have not had a weekly uptrend on Apple. I'll remind you, well, we didn't really set one here. This is just one clear move up. Weekly uptrend, you really have to go back to pretty much the midpoint of last year, if you can believe it, right? To a clear two-step weekly uptrend recovery. So it's been a long time on Apple, and it is potentially coming with this most recent earnings beat. So I don't want to get too ahead of myself, but Apple looking very good. If we pull back into the 180 level, I will be playing Apple stock again, 180 down to 175 on these short puts. Now moving on to AMD. AMD with a decent day of recovery, up about 3% on the day. So AMD is still in the context here, guys, of that daily flush, right, that we got after earnings. So it was a daily downtrend for a very long time. They got a nice little daily uptrend here and then lost it into earnings. So unfortunately, the bulls are starting from scratch. What we need to see, guys, once again, this daily bounce is now underway. Need to measure the size of the bounce. The size of the bounce so far is not even 50%. So it does not guarantee that the bulls, if we lose this upside, can set the higher low into higher high. We need to see more of a recovery, guys, as close as possible to a fully engulfing move. If we can really get back up here to the 158 level, it sets up the bulls beautifully to either engulf and reset this way, or maybe do a two-step process before attacking this big zone of resistance above us, which is pretty much your 166 to 158. So nice little start of recovery on AMD, but definitely not out of the woods yet. Still have to complete the daily trend reversal first, and and then we can measure the size of the weekly move back to regain this weekly trend as well, since we are now still in a weekly downtrend. So the below support levels, 142 down to about 133, those are the areas that I will be looking to play some short puts on AMD on over the next 2 weeks, looking fairly good. And the valuation down here in the 140 range is a lot more manageable than it was up here, that's for sure. Now let's move on to Amazon. So Amazon, decent little day as well, up about 0.81%. Amazon getting very close to its all-time highs, right? So daily uptrend in motion. Any single move lower at this point, just going to be looking for a higher low. Anything above 175, just looking for that daily higher low for further trend continuation. No red flags on Amazon at all. We're now above two key areas of congestion, guys. Number one, the moving averages. They will be acting as support for the bulls. And number two is this 178 area. 178, guys, was a crucial point in time for Amazon all of 2020 and 2021. So it's nice to see that we're clearly above that. And even on the weekly, guys, the weekly is looking so gorgeous right now for weekly trend continuation to the upside. And just the continuation of this gorgeous monthly uptrend as well. So I would not be surprised, guys, if Amazon, the next target that it's probably heading for, if this bullish momentum in the markets continues, is most likely that $200 mark, either over the next 1 to 2 months. I would not be surprised, especially with how good their earnings were and how good their guidance for the rest of the year was as well. Now, moving into Google. Google up about 0.31%. And this is the type of move that I was saying we may be expecting from Apple, right? Big gap up, maybe some consolidation, set that daily higher low before attempting another run. Well, this is exactly what Google's doing from after their earnings, right? So nice daily uptrend, looking for the daily higher low. Daily higher low is set. How do you know that that's set? Well, they recaptured the hourly trend, guys. Always when you're looking for the daily trend shifts, look for that hourly trend change. As of now, looking very good. So we'll be looking for Google to really mount above these highs right here at about 177. Two possible scenarios can happen, one of which is we just roll over from here into a daily downtrend. Then we'd be looking to maybe revisit the 161 as support. It would be a daily downtrend. That would be a healthy daily downtrend, would just be for weekly consolidation, set the weekly higher low before a maybe another leg up. Looking very good. The other scenario that I might be able to see is if the bulls can't do it right away, maybe just a little bit of sideways consolidation and then break to the upside after making a nice bull flag at the top. Those are two possible considerations for Google, as I do believe this stock is going to do very, very well over the rest of the year too. Now moving on to Meta. Meta up 2.33%. Hey guys, we have finally a daily confirmed uptrend on Meta. So looking very decent. Daily confirmed uptrend on Meta means that our weekly bounce is now underway. So same rules do apply. Now we need to measure the size of the bounce. So how long can this daily uptrend continue for? Well, I would at least like to see them fill the bottom end of this support zone right here. I erased it, my bad, guys. So this zone right here, right? If we can get as high as about 480 would be a very juicy sized bounce. 480 on the fibs, that would be roughly the 618 level, right? Just under it, but still that would be a very nice bounce. It would allow the bulls to start recapturing potentially this weekly uptrend that they lost with this big moves down after earnings. Very nice first step for Meta right now, looking for them to continue this daily uptrend. So as soon as this move tops out, just looking for a higher low for further trend continuation, anything above 428.30. Looking very good on Meta, guys. And if we do get that little bit of revisit down here, I'll continue to play Meta short puts, guys. Anything 420 and below, I do think that is very good value for Meta and a very nice opportunity to make some swing trades down there. Moving on to Microsoft now. Microsoft up 2.22%. Decent day for Microsoft as a whole. We're now back within our prior range of consolidation between these two yellow lines, right? But one thing that we did do, guys, is we're now creating a lot of space off these lows. The bulls are trying to make the trend change attempt, right? So it was a daily downtrend, clear as day. And now the bulls, nice sized move. Take a look at the size of this bounce on your most recent leg of downward selling. Almost a 78% bounce. It sets up the bulls beautifully for either the V shape if ever the markets continue being bullish, or at least the two-step recovery process. So as soon as this move tops out, just looking for a higher low, anything above 389 for that higher low, and probably going to be looking for this area right here, guys, that 397, 398 to be acting as support and helping the bulls try to mount back above. But what we really need to get back above here, guys, within the next 2 to 3 weeks, in my opinion, need to get back above this range right here. 415 is crucial, guys, if we want to really start breaking out of this channel again. set that weekly uptrend back in motion and really continue on this beautiful monthly trend expansion too. All in all, not looking too bad for Microsoft. If ever we see a dip next week, guys, back into roughly the 400 range, 399, I may be tempted to make some short put plays under the lows right here. So think 385, 380 if I can get the premium. Now moving on to Netflix. Netflix also with a great recovery here. Netflix pulling a Meta, right? After their earnings, these charts look so much the same, right? Meta, gap down, sideways consolidation, break it now to daily uptrend. Netflix just the same. Gap down on earnings, sideways consolidation, and now with the daily uptrend reversal, daily uptrend reversal looking very, very healthy on Netflix. Netflix now back above the 575 level, that yellow line right there. 575 was a huge level of resistance for Netflix back in 2020, 2021. And yes, even though it's 3 years ago, it does still impact the price today. Very nice to see them with an engulfing move doing that. So at this point, guys, any move lower, as soon as this move tops out, just look for a daily higher low, anything above 544, daily higher low for potential trend continuation. I would need to see them gain a little bit more space here, guys, because on the weekly size of the bounce is just not good enough, similar to Meta, right? Only bouncing about 38%. So I would like to see them bounce at least to about the 600 level. If you can get us up to 600, I'm not saying break it, because 600 is a fairly big area of resistance, right? A lot of resistance up here at the 600 level. So if we can at least get up to 600, then we might be able to use this whole zone right here as a fallback support area before potentially making another leg. And on the weekly, that would look something like this. And then set the weekly higher low, and then move back on to a weekly uptrend. So all in all, Netflix starting to regain the levels, looking very healthy. Now moving on to NVIDIA. NVIDIA with a monstrous day, 3.46% to the upside. Daily uptrend back in motion by the bulls right now. So as soon as this move tops out, we're just looking for any move lower to be a higher low, anything above 815, looking for that daily higher low for further trend continuation. NVIDIA is now above our two crucial levels that we were eyeing over the past 2 weeks. 850, this yellow line right here, big support, guys. We're back above it, so now we can use it as support again. And we're now back above all our short-term moving averages as well. So the bulls really have the wind at their backs currently. In terms of your weekly, guys, the weekly is looking very, very good. Never lost the weekly uptrend. One single weekly move up. Weekly higher low is set. Now looking to fulfill the continuation of the weekly uptrend. So all momentum is pointing to the bulls right now. NVIDIA with earnings coming up in about 3 weeks' time at this point here, guys. So am I expecting leaps and bounds before earnings for NVIDIA? No, but can we potentially retest this 958 and maybe make our way up to the $1,000 mark? If the markets are very bullish over the next 1 to 2 weeks, yes, that's possible. But are we going to go on an exponential rally before earnings? I don't really think so. Still, though, if we do get some potential downside, right, some consolidation here, right, that could be a very juicy opportunity to maybe position ourselves for some light positional swing trading leading into those earnings. Obviously, we want to get as low as possible on that. I need to monitor if the market actually gives us that opportunity or not. But I will definitely let you guys know, guys, if I see an opportunity on NVIDIA, I will be taking it. Now, moving into Tesla, let me get a quick sip of coffee again. All right, so moving into Tesla. Tesla up 0.66% on the day. Not too bad, but Tesla's still in a little bit of sideways consolidation. This is pretty much Google and Apple, right? So big move up. Now just sideways consolidation. But it's nice to see, guys, that the bulls are putting up defense exactly in the region that we had drawn on the chart. 181 all the way down to about 171. Huge area of previous support right now. And we are now above our moving averages as well. So the bulls should be able to mount some defense right here. And they are doing it, right? So we had this consolidation down. Now we're getting really tight here. What I need to see from the bulls next week is recapture this hourly trend and really start pushing this to the upside. Give me that daily uptrend. If we can get a daily uptrend, that would be a break of 198. Let's call it about 199. Break 199. That would be the first daily uptrend on Tesla since all the way back here in February. And this one was fairly weak. This one seems to be a lot stronger. So looking for Tesla to really mount above that. However, if ever, guys, we fail and maybe set a daily downtrend and come into these lows, well, on the weekly, we have created a ton of space, guys. Weekly downtrend, clear as day. Everybody can see that, right? Now, we have a weekly engulfing move. So the bulls have created a lot of space that even if we were to pull back on the daily a bit more into the lower 170s, The bulls have so much space, guys. Anything above 140, just looking for that weekly higher low for the weekly trend shift, right? We have not had a weekly uptrend on Tesla since last fall, pretty much. So it's been a very, very long time. So those are a few of the things that I will be looking out for on Tesla. If for some reason we do pull back in here, I may start playing Tesla again, but I'll be very conservative on my strikes. I will let you know if I do play them in the upcoming weeks. Now moving on to Palantir. So Palantir has earnings on Monday here, guys. So really can't say too much. They have earnings after the close on Monday. So really only 1 day of trading left on Palantir, but they did do something significant, okay? So now daily uptrend was clearly back in motion. We're now back above our moving averages, back above this 23 level of previous resistance, previous support as well. Now we're going to be able to use this line as support once again. However, none of that matters, guys, because Palantir's earnings on Monday, the expected move is about 8% in either direction. So 8% in either direction can either send us all the way back down to the lows of 21s, at which point we'd still be healthy as long as we don't really lose the 20.5 level. And to the upside, that could really send us really, all the way as high as about in the 25 region. So all eyes are going to be on earnings. What I would like to see, though, is in either case scenario, guys, if we get a little bit of downwards momentum here, I will most likely be looking to pick up this stock in the lower $20 range, even as low as 19s if we can find it. And to the upside, guys, the upside break would be quite significant because of your longer time frames. We are looking to reverse this weekly downtrend that we've been in now. The high of that downtrend is 25.30. So a nice move on earnings could engulf this entire move, set up the bulls nicely for the two-step recapture of the weekly uptrend. And if we get the weekly uptrend back, it means your monthly higher low is set at the low of last April. And we are due for maybe that next leg of monthly upside for Palantir and start attacking the 28 level again. So looking very good. I will be playing Palantir earnings, probably writing short puts, guys, under $20. So I'll keep an eye on that, and I'll keep you guys posted most likely over the weekend when I do my top 5 options video. I'll probably include the play on Palantir that I want to make for earnings. Now moving on to PayPal. PayPal looking obviously, not as good as the rest of the market here. The only one of the list that I covered that was red, but was about 1.91% down on the day, right? So PayPal, unfortunately, now losing the daily uptrend. Yes, lower low, lower high, lower low set again, guys. So unfortunately, daily downtrend for PayPal, but we are coming in to a big key area of support right now. That is pretty much, $64, your longer two moving averages. We are rejecting from the short-term ones right now, but a bit lower. We do have the longer form moving averages there too. And this pullback is still relatively healthy in the context of this weekly chart right here. So we can see nice weekly uptrend, but we gave back the entire move of this week after earnings. That is not what I wanted to see for the company, right? It just doesn't look very good. Just really hints that PayPal may just continuously be stuck in this lower $60 range. If we start marching back towards here, may just be a tightening range on the weekly, guys. So still no clean break and close above our big area of resistance. And that is the one thing that we need. We need to have a weekly candle break above here if we want to be targeting that 75 area. So PayPal still being unfortunately left behind. That being said, the company does represent some good value, but a bit lower in my opinion. Only about the $60 range would I be interested in playing this company again. That's pretty much everything that I had for you guys in terms of our stock market today. Now let's take a brief look into my portfolio and see the positions that I closed for today. All right, guys, so taking a look at the portfolio, even with the Starbucks loss this week, which was pretty much, I believe, our only loss of the week. Oh, with the Expedia one I took today as well. I'll show you that, guys, that in a bit. Well, guys, we're actually performing very decently on the year right now. 14.33% to the upside. That is well above your S&P 500. S&P 500 roughly about 6-7% right now, and still well above the NASDAQ as well. So now we're starting to get into that normal performance that we're used to on the channel, starting to outperform our benchmark indexes. So very happy with the way we've been playing this earnings cycle so far. Now, moving into our positions, guys. Well, we can see on the top here, we have SoFi. So SoFi closing the week just under one of my strikes, but above another one. So just under the $7 strike. So next week, I will be the happy owner of 1,000 shares of SoFi. So about a $7,000 position as of now, but we got a nice credit of about 19 cents for them. So my break even is actually 6.81 on these contracts. We ended above the 6.5. So all of this $80, we will pocket that, and this position will just vanish. So very happy with the way this trade played out. As a matter of fact, guys, SoFi for next week, The call side, if the price opens as it is right now or higher, we're already getting about 16, 17 cents for them. That is over 2% for 1 week. So the covered calls are very juicy. I will be looking to milk the most premium out of this position as possible. Now, that's it for SoFi. Moving on to Square. So I had some Square short puts that we had yesterday, right, leading into the earnings. Square obviously ending above those two strikes. So Square performing beautifully after their earnings, ending at about 69.47. So we collect all of this premium in our pockets, right? That $88 and the $62 as well, completely worthless. So we just collect that as a whole. Very, very nice trade on Square. Now, the trades on Apple were good as well. Apple 162.5 short puts and the 167.5 short puts collected all of that premium to $62 plus another $145 right here, right? So roughly another $200 on Apple. Very, very good trading session as a whole today. Now, in terms of our Apple calls, we did sell the Apple calls here, guys, and we got very, very good profits on them. If I can just pull up here for a quick second, where's the order book right here? So if I can just pull up the order book, you can see that we sold the 175 calls for $11. We had an average cost on those of about $4.25. So very, very juicy, guys. Almost a 3x on that position. I'm very happy that position netted me alone pretty much $2,000 in profits this week. So very, very healthy position. One of the losses that we took, however, is the Expedia short puts that we wrote. So Expedia coming in well under expected in terms of their earnings. We had the 120s, and I had a decision to make, guys, at a midpoint during the day. So I had a decision to make when we were trading roughly around the 118, high 117s, either to cut this position and save the money for more earnings plays next week, because there's a lot of good ones that I want to play next week, or do we keep them and write covered calls? Well, I chose to cut the loss at a very small loss and do covered call, and instead of running the wheel on this one, I'm just cutting the loss and I'm reallocating the capital to some more earnings plays as of next week, right? I want to be able to play the most amount of these earnings plays as possible, because coming into this earnings season, a lot of stocks were down significantly and volatility is up. So we can get very juicy premiums by going a lot under the expected move of the stock. We do sometimes take a few losses, and Expedia was one of them. So Expedia, you can see here, very transparent. I'll show you the wins. I'll show you the losses. You guys know me, right? 120 puts, we wrote them for 76 cents and we had to close them today for $2.30. So we had a loss of between the two, right? Of roughly, let's call it about $150, right? About $1.50, $1.55 loss. Now, moving nextly into our few positions that we had after that, we had the Coinbase 180 puts. We closed those for about 31 cents. So we had written those on the day prior, guys. The Coinbase, right? We had written them for about $1.50, but they were for next Friday. So not all of the premium came out of those contracts, but we were still able to close them for a very healthy 31 cents. So very nice profit, about $120 on Coinbase. It pretty much kind of offsets the Expedia one, if you will. Not quite, but you guys get what I mean. We did also have the FORTINET 56 puts. Those ended pretty much, we closed them as a matter of fact on the day. So FORTINET, you can see here that we wrote the FORTINET position. Where are they? FORTINET $256 puts for 64 cents. We were able to close those for 2 cents. So 98% profit pretty much. Another $120 there. Very happy with that. And then we had the CLOUDFLARE. We only had one contract of CLOUDFLARE at $70. You can see the contracts pretty much ended worthless on the week because they ended above their $70 mark, right? And the CLOUDFLARE ones, you can see that we wrote them yesterday for about $70 here, and we were able to close them for roughly $6. So another $64 in our pocket, roughly 1% for 1 day of trading. So all in all, guys, I apologize. I didn't tally all of the money that we made this week, but if I had to just ballpark it with the Apple calls, we made roughly even with the Starbucks $800 loss and the loss on Expedia. We made over $3,000 this week. So very, very juicy week indeed. Very happy with the performance of the portfolio as a whole. And you can see I do still have a few little tiny swing trade positions down here. That PayPal call, $75 call for next Friday. 99% sure, guys, that it's going to be worthless, but it's already kind of worthless, so I may as well just leave it there, right? See what happens. We have those MERCADO LIBRE 2 shares that I've never sold, still in those. Unfortunately, never averaged more into the position, but still $3,000 position, and we are up fairly nicely on it, up about $200 right now, so I can't complain. And then obviously my Canadian banking shares down here. So that's pretty much everything in terms of the trades for the day. Very, very solid day in trading, solid week in trading as a whole, and now our portfolio is really getting back to the numbers that we, that we're kind of used to, right? Starting to outperform the indexes once again. And I do believe this outperformance will simply continue, guys, just because of the nature of our strategy, right? We get assigned some plays. Sometimes it takes them a while to come back, but all while we're writing premium on them. And that was the case here for this whole time. We did a great job at maintaining pretty much with the markets. And now that we went pretty much over the last 2 weeks, we went almost full cash and really playing this earning strategy to really milk the markets as much as we can. We're really starting to outperform. And then when our earning cycle ends, well, then we'll go back to the traditional wheel strategy, guys. So very, very simple pivot that I made right here to benefit from the increase in volatility. And so far, so good. The past 2.5 weeks of trading have been quite amazing. That's pretty much everything I had for you guys on the channel today. Hopefully you guys appreciated it. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. And also consider subscribing to the channel if you're new, guys. We do these daily market recaps every single Monday to Friday. So hopefully you join us for more of them. And lastly, if you have any questions whatsoever, guys, please feel free to send them down below in the comments. Anything you want. If you want information on a stock, technical analysis, an options play that you're considering, if you want to talk about the macro environment right now, anything you possibly want, leave it down below in the comments and I'll be more than happy to answer you, usually within the first 24 hours. So take care, guys. Have a great weekend. I'll see you on Sunday night for the top 5 options of next week. Take care and peace.